It's Ilana here with your May market update. Well, spring is in the air, everything is growing and blooming, especially your investment portfolio. We have seen outstanding results year to date across all asset classes, really. Stocks, bonds, real estate have all performed really well. Inflation continues to decline, which is a great positive for us. The economy exceeds expectation and has remained very, very resilient. And while the market is no longer cheap, I'm really pleased to see very strong corporate earnings for the first quarter. And most importantly, the guidance of many companies is being revised to the upside. So this is a real shift from last year where many companies were looking at downward guidance with their earnings, lowering their expectations. I think that we can attribute a lot of this to the fact that last year companies really focused on efficiency. It was all about where can we cut costs, how can we run our business as lean and as efficient as possible, and we are certainly seeing the rewards of that on the other side in the earnings reports that are coming out for Q1, as well as the expectations being a little bit higher as we move into Q2. So the economy has adapted to the higher rates quite well, but we are anxiously awaiting our first rate cuts. We are expecting the Bank of Canada to cut ahead of the Federal Reserve in the US, and in all probability, we should get our first rate cut in Canada in June or July of this year. With the United States, we are expecting around September. The labor market continues to be resilient, which is great because that is what has helped us to avoid recession during this challenging economic period of time. But the hourly earnings is slowing, and it's come in a little bit lower than expected, and that is really good news for central banks as it brings the fight of inflation to a point where we can come closer to cutting rates. So it's really good news, the fact that the labor market, which has been a very sticky part of the inflation story, that it is slowly coming down and moving in the right direction for central banks to move ahead with those rate cuts. Small businesses are still not fully participating, so we've seen the rally in the market broaden outside of just the technology sector, but we are still seeing a bit of a lag in mid-size and small-size companies. And we do think that that's going to start to pick up as we move into the second half of the year. China's growth is slowing, but it is still surprisingly good. They've had rate cuts in China already, and they continue to export deflation to the rest of the world, which of course will help with price stabilization and continue to keep inflation at lower levels. All of these factors have had a very positive impact on our portfolios. We've seen really robust returns, and we hope to continue to see that as we move throughout the later part of this year and into the summer. I have attached an outline of some more detailed economic facts with this report, and if you have any questions or wish to connect with myself and my team, we are always available to you and look forward to hearing from you. Take care and have a great day.